Good afternoon, ladies and gentlemen. As I talk to you today, I was reflecting that if I was to make the same speech in April compared to today, it would have been a very different environment. In April, there was a lot of doom and gloom all around us. But since then, I think things have turned out to be better. They are better than what we had envisaged. And where do I see the positives? One is you look at the capital markets themselves. They have been much better than what people expected. Moreover, you see the capital raises across various sectors, whether it's in the financial sector, banking, other industries, people have been able to raise capital. And the liquidity, the global liquidity is also finding a place here. The fundamentals as far as India are concerned are also strong, whether it is on the balance of payments, the current account deficit, as well as if I look at the reserves. The fiscal deficit, in my view, is fairly under control given the circumstances. The challenge comes in the fact that now we are seeing inflation rise. I think the inflation rising is more because there's a challenge as far as the supply side is concerned. The supply chain is just not working because of the restrictions being put on interstate movement of goods, because of the frequent changes. Sometimes there's a lockdown, sometimes there is a opening up of the economy in various states. That's having an issue. And that is something that we need to tackle. We also need to tackle the fact that the COVID is still an issue and the numbers are increasing. The hope then is the vaccine. As the Prime Minister says, it should come in by the end of December. Other experts are saying that if not December, at least by March, we should have a vaccine and things would then improve. During this period, I thought it is a good time for me to speak a little bit about what we have been doing and how I look at the environment. As far as NBFCs are concerned, we need to appreciate the fact that NBFCs play a critical role as far as the economy is concerned, more so as far as the MSMEs is concerned and the real estate sector is concerned. And therefore, for any economy to grow, it is essential that the NBFC sector also grows. As I look at it today, well-run, governed companies and NBFCs have been able to attract capital. And going forward, I see that a consolidation is taking place as far as the NBFC sector is concerned. And because if India has to grow, it cannot grow without finance, and it cannot grow without the growth in the MSMEs as well, which actually have about 46% of the GDP and 50% of employment, and the real estate sector, which again forms about 7% of the GDP. Therefore, both these sectors, the biggest funding does come from NBFCs. And as they grow, NBFCs will have to fill in this place. And with consolidation taking place, I see that the strong NBFCs will complement the banks and play a critical role in reviving India's growth. As we are concerned, I would like to just share with you what is the track record that we've had. Over the long term, over the last 40 years, we've seen that if you run a value-based business, ultimately it creates long-term economic value. And thus, when we shifted from textiles to pharmaceuticals, we created value. And when we shifted on to financial services and pharmaceuticals, value continues to be created. We as promoters believe in the long-term story of our company, and hence over these decades have not divested, but only invested more into the company, as we did in the two rights issues that we did recently in 2000 and 2018, and again in 2017 and 2019. I want to now just share with you what has happened in the last 12 months. We've had a challenging environment, particularly in the space of NBFCs. Post the ILFS crisis in 2018, there was a flight for quality. During this period, liquidity for the NBFCs had become very tight. And thus, our focus was, as a company, to bring in as much liquidity as we could. Towards this time last year, I had made a commitment to shareholders that we would get in 8 to 10,000 crores of additional liquidity into the system. I'm very happy to say that instead of that, we've exceeded that and have brought in 14,500 crores over this period. We had a business in the US called DRG, and that we could sell for 6,000 and got us 6,800 crores. It's what's important to recognize is that this was done during the time of COVID. Not only this, another big investment or a divestment of 20% of equity in pharma was also done during COVID. And this brought in, besides the DRG sale, we also did a preferential allotment to CDPQ. CDPQ has been our existing investor and one of our the largest investor today, and we brought in 1,750 crores to that. I'm very happy to say that our shareholders supported our rights issue and we could raise 3,600 crores in that as well. In addition, we sold our stake in Shriram Transport, thus bringing the total inflow of money of capital last year into by 14,500 crores, which has meant that our debt has gone down from a consolidated debt of 52,000 in June 19 to 38,000 in June 2020. And our equity has gone up from 27,000 crores to 31,000 crores. In fact, we are one of the largest equity bases today in the NBFC space. Because of all these measures that we've taken, our net debt to equity has come down to 1.2 times in June 2020 versus 2 times in September 18. And the debt equity ratio, the financial services, today is 2.2 times compared to 4.4 times in September 18. I also want to talk about the recent pharma transaction that we have done. Realizing the importance of pharma and the opportunities of growth that we have in pharmaceuticals globally, we decided to raise some equity, additional equity in this, and therefore have now got a deal signed with Carlyle for giving 20% of our equity in the pharma business to Carlyle, which has been valued and enterprise value anywhere from $2.7 billion up to 3.16. The final valuation we would know depending on the March 2021 results. It's interesting to note that this whole transaction, including all the diligence, all the legal documentation and all, was done during COVID time in a virtual environment. And I'm really happy that we could do all this without people actually visiting the plants, but yet getting enough comfort about the quality of the plants, the quality of the people, the quality of the products, which just shows that the values that we have espoused over so many years continue to be still being respected and valued by people who are putting in money. With this, what would happen is that when this transaction closes, which we expect to close somewhere in the October to December quarter, we will get our debt equity on a consolidated basis will come down from 1.2 times debt to equity to 1:1 equity, therefore further strengthening the balance sheet and giving us opportunities to grow. It's interesting that in 2010, we sold our pharmaceutical domestic generic business to Abbott for $3.2 billion. In the next 10 years, we've been able to recreate a business which is giving us a value of almost $3 billion. So, again, showing that our team has the capability to build and rebuild businesses. When we started in 2010 with this business, which is really a global business, with 93% of our revenues coming uh, from international customers, we had a margin of just 7%, and our turnover was hardly anything. And today, we've been able to raise this margin to 24% and have a good turnover, thereby showing that we have been able to build in strong businesses. During this period, during the last 1 year, we've had inflows of 36,000 crores into our business. And in this COVID time, in the first quarter of the current year, from April to June, we've been able to raise 9,600 crores of long-term loans alone in this, and thereby shifting our borrowing mix and adjusting the ALM. In September 2018, when the IL&FS crisis took place, we had 18,000 crores of commercial paper. We have been able to replace this with long-term loans, and today the CPs that we have are just 1,000 crores. And if you look at it, Piramal Enterprises has undergone multiple rounds of transformation. We were first in textiles, then got into pharma, and now in a new way of pharma, plus the financial services. Today, we are again evolving our business model. We are building a well-diversified financial services business. Till now, it was predominantly in wholesale, and now we are expanding to retail as well. Also, as I said before, there are today many opportunities that are coming up post the COVID. In a crisis, post a crisis, it is actually the stronger who become stronger. And there are opportunities today, and there will be many more in the future for doing consolidation. These are some of those that we would look at. We would do that across financial services and again across the pharma space. In the pharma space, one of the reasons why we did raise the capital was to take advantage of the inorganic opportunities. We are also, as I have said before, well positioned to unlock value in the medium term by demerging both the financial and the pharma businesses. In the financial services, we want to diversify our financial services by having a much more granular and diversified portfolio. In granular, I mean that as far as the wholesale book is concerned, we will bring down single borrower exposures. And as far as diversified is concerned, it's not only going to be wholesale, but as well as retail, because we see that there are good long-term growth opportunities to build a multi-product retail lending platform, which is digital at the core. We see that there are significant long-term growth opportunities in the Bharat market, if I may say, or the market which is not yet covered by either the public sector banks or by the private banks, which are the smaller parts, which is actually the market which is really growing today. In this current year, we are laying the foundation of the business, the processes, the policies, and people, and we are incorporating all the learnings from COVID. We are also transforming, as I said, our wholesale business. During this period itself, we have started this process by making it more granular. The top 10 exposures of ours reduced by 4,000 crores to now 14,000 crores in FY20, and with only one account which is greater than 15% of the net worth. We are continuing in that direction, and you would see that at the end of this year, these exposures will further come down, individual exposures. Besides that, we are also, one of the reasons I've found is that many people wonder about the quality of the book. Many people feel that in a real estate, the quality of the book that we have may not be as good. And that's why one of the ways we want to demonstrate that is that we can bring down the quality of our book by refinancing our loans and by therefore exhibiting to the market the high quality that we have done of our underwriting. We are also building off-balance sheet fund platforms for future high-yielding opportunities. We have already relationships with CPPIB, and we are soon in the process of announcing an InvIT. We've got a joint venture with CDPQ in funding as well as APG. We are also looking, we also have a joint venture with Bain as far as the stressed assets space is concerned. Many people are wondering what we did as far as the risks of COVID-19 are concerned. We conducted a scenario analysis and taking a worst case have created an additional provision of 1,900 crores at the end of the last financial year. So the total provisions today stand at 3,000 crores. And if I look at the book of the wholesale, this is almost 6.3% of the wholesale book, which is a significant reaffirmation that we have been very, very conservative in this. And we have looked at each deal and are seeing how during post-COVID that these deals come out and perform well. The pharma is playing an important role in these tough times and one of the safest and most resilient industries. We've had a consistent business performance since 2010. Our revenue has grown at a CAGR of 15% year on year and reached the 5,400 crores in FY20. And EBITDA margins, as I said before, have also gone up from 7% to 26%. And we've had an impeccable track record as far as quality and compliance is concerned, with not a single closure because of any FDA issues. We have taken several measures to ensure that our supply chain is secure during this period and business continuity and safety of our employees. We are now at an inflection point. Businesses have clearly defined roadmaps and are making progress. We have adapted to the new normal and changed the way we do business wherever needed. Confident that we will emerge stronger post the COVID-19 era. Thank you.
Thank you, Mr. Piramal. I would request all participants to post their questions in the Q&A box. I would now like to hand over the Q&A session to Mr. Rajat Rajgarhia, MD and CEO, Institutional Equities, and Mr. Alpesh Mehta, Senior NBFC Analyst at Motilal Oswal.
Good afternoon, Mr. Piramal. How are you?
Very well. Good afternoon. I'm fine. Thank you. I hope all of you and all the viewers are safe and taking care of themselves.
Yes, all is good. So thank you for those wonderful introduction to the changing times that we are in and how Piramal as a group is adapting to these changing times. So one of the, let me begin this interaction by focusing on what we have been doing last 12 months, which is deleveraging the group's balance sheet. And this is a trend that we are seeing actually in many of the largest corporate groups in the country, that the big ones in this last 12 months are focusing to either reduce their debt considerably or deleverage the balance sheet. Right? What is a key message that you are seeing right now in this, where either owning a debt or a leverage is becoming a very important issue to focus for business houses like yours? So if you can just share what has been the underlying thought behind such a significant deleveraging that you have done in the last 12 months.
So I think what is important in a time of crisis is that actually cash liquidity is perhaps the most important thing. If you are playing for the long term, I think this is a good opportunity. There are, first of all, if I look at the environment, there is a lot of capital which is floating around in the world. You know, you've seen that this is the first time, at least in my history of working, where you found that loans were being given away like for virtually for no cost. And in fact, you had to pay money to deposit to keep cash. Has not happened before. So therefore, there's a lot of liquidity. But important is that this liquidity is only chasing good companies. And therefore, this is the time when one should raise enough liquidity. And because post the crisis will get over. Once you have a vaccine, once people are administered the vaccine, which I believe should happen, as I said, by the end of the first quarter next year, you will find that businesses will start reviving. And only those which have enough liquidity, there'll be many opportunities to grow, because not all will be able to do that. You will have to grow both organically as well as through acquisitions. So you will not get this opportunity later. And that's the reason why we felt that it's important to strengthen our liquidity position.
Right. The second important aspect of Piramal Group is transformation. And you rightly captured in your speech that from textiles to healthcare to FS and now again healthcare again. One is, of course, we have been in the right businesses at the right time. But when you look at the group now, do you think these are the two businesses that we will essentially focus on for the next few years? Or you see opportunity somewhere else also, which you think you would like to venture in the coming times?
So in Piramal Enterprises, I find that both these businesses have got a good runway for the future. And let me spend some time on both of them. As I said briefly, as far as the financial services space is concerned, no economy can grow without a strong financial sector. We've seen that that's time immemorial. We are also seeing that India has to get back onto the growth rate. And in fact, the whole geopolitical situation globally means that there will be opportunities for India to grow. And I also think that this Atmanirbhar Bharat that has been talked about will also mean that Indian industry will grow. So combination of what's happening outside in the geopolitical system and within means that businesses will grow. For them to grow, it is absolutely essential to have financing. And we've seen that banks alone cannot meet the requirements. NBFCs have to be there. And that's where I find that we will have a position to grow. So there's enough opportunity. Growth, if you look at it, every 10 years in the financial services space, and then there has been some disruption. Whether it was in the 90s, if you remember, the NBFCs came onto a lot of stress. There was the famous CRB, and so many other large business houses had NBFCs and all had to shut down. And that's when you got the emergence of the new HDFCs and the new Kotaks. Again, in 10 years later, after the financial crisis, again, you had a disruption in the NBFCs, and you had the emergence of the Bajaj is coming out in that decade. And I think this same thing is repeating itself now. And the next year onwards, you will find larger companies, newer companies coming out in space. So there is space for more companies to be in this space. As far as pharma is concerned, you've seen that there is a good demand. I think investment in the whole pharma sector, both nationally as well as globally, is only going to increase. People have realized that just like you need defense as a strategic asset, you also need pharma as a strategic asset. And that's why you've seen the focus that even our prime minister and the government is putting on creating pharma capacity. We are actually fortunate. We have pharma capacity, physical capacity in India, but we have it in the US, we have it in Canada, we have it in Europe. That just strengthens our position. So, and I'm finding that in each of these countries, people are giving enough importance to see that the pharma capacity only builds up, people buy from these. So again, I see pharma also growing. So both are growth sectors, and I think that's where we would want to focus on.
Good afternoon, Mr. Piramal.
Good afternoon.
So, sir, over the last 4 years, we have seen everything like demonetization, GST, then IL&FS crisis, and now COVID. And you have built the NBFC business over the last 10 years, but within that, the last 5 years have been extremely challenging. So, what has been your experience in terms of dealing with the liquidity situation or the asset quality or the risk management situation for your NBFC business? And what do you think that we could have done slightly differently that would have helped us in a slightly better situation? That's first. And secondly, what would be your suggestion to government or the RBI in terms of what all measures that we can take in terms of strengthening the financial services?
So I think it's a very good question. What have we learned in the last 4 years? I think you talk about a black swan event. I think there were several black swan events all put together. Whether, as you said, it was demonetization, GST, RERA, ILFS, and then every other business that had to go down went down, and COVID. So I think what we have learned and is that it is important that you have a well diversified and granular book. And that is what we are demonstrating now to make it a well diversified and granular book. I think what we've also learned is that during this time, our underwriting has been quite good. Actually, we have been saying this from the last 3 years that there's going to be consolidation as far as the real estate space is concerned, that only the good large developers will survive. And that's where we had focused on. So therefore, I think that underwriting has proved right. Even in this period, I find that the loss given default, the LGD, is restricted in real estate. That is one secured loan where you can actually recover your money by either moving one asset from one developer to another stronger developer, by taking over the asset and developing it, rebuilding, continuing on the building and so on. So if you've done a reasonable amount of, if you have done a good underwriting, then the LGD is limited. So what we've learned is, I think the main thing is that you have to have a diversified and granular book. Also that one has to focus much more on the ALM. Unfortunately, I think one of the things we realized is that post the demonetization, so much of cash had come into the system that people were lending, especially the mutual funds or the CPs were available at ridiculous rates. So rather, and I think we also got greedy in that. So the thing is that one has to match ALMs. The third thing I've realized is that you, as I said, every 10 years there's a shakeout. So you have to be strong so that you can take advantage of the shakeout. So these are some of the learnings. What we want, what would we let, what do we want the RBI to I think, first of all, I have to say that they have taken some very good steps. And this is, I find that very close coordination between the RBI and the government and other regulatory agencies. So I just feel that these are good steps. My own feeling is that sometimes the intention is good, but there could be some gaps in the execution. So, for instance, we talked about MSMEs. The government had announced that there was a 3 lakh crore to be given to MSMEs. And out of that, if you see till now, only a lakh of crores has been dispersed. Now, these are urgent needs. You have to be faster. One of the reasons is because the NBFCs, which actually form the major area for giving to MSMEs, the funding that the NBFCs have not given enough to MSMEs because they themselves would rather protect their liquidity than give it to MSMEs. So how can you increase the funding to to NBFCs so that the small and medium can get more funding? That is one, I think, specific suggestion I would give to the RBI and to the Ministry of Finance. The way they could do it is that the TLTRO scheme, they could extend it further. Today, only 45,000 crores have been given to NBFCs. Can we make another lakh of crores? Because ultimately that will go forward to the MSMEs, to the real estate sector. So there are such a few other suggestions.
Second question is, sir, we are seeing at least the new emerging trend that earlier most of the financial services used to be slightly higher leveraged, maybe around 10 times, 12 times at the bank level, and the diversified retail financiers were at around 7, 8 times, and the wholesale financiers around 6, 7 times. Now, the new trend has been to reduce the leverage significantly. Are we going to see a structural shift into the ROEs for the system or for the financial services business? With a lower leverage, what's your sense, and should 15% be a reasonable ROEs that one should target, or the 20% is something that we would aspire to be?
I think in this environment, one must look for lower ROEs. We ourselves are looking at in between the 15-17% range. The way the ROEs would stack up is besides the lower leverage, one must look at other ways, as I said, fund-based, where the ROEs can be much higher, and service income. I think that's the way forward. I don't think that in the environment that we are in today, and the environment may continue for a couple of years, you cannot look at as high a ROE as before.
Mr. Piramal, one of the businesses that we would have discussed the least in the last few years has been your pharma business. A lot of focus has gone on FS, but as you mentioned, we are 5,000 crore plus turnover last year with EBITDA margins now inching up closer to 24-25%. So two things that I wanted to hear from you. First, we have an impeccable record of having no US FDA issues during this whole period. And the last 3-4 years, we have seen that being the center point of discussion, right? What are the different things that we have done as a group which has allowed us to manage this issue very well?
I think, first of all, it really emanates from the values of the group. And this is what is very important for us. We say that whatever we say we do, it should be in alignment. There should not be any difference. So we have never taken shortcuts. So that is one very important thing. And we've always seen to it that the quality reports to the board itself. So it is not it's not that somebody, very often the business heads, their focus is to somehow improve the profitability. The short-term pressures are always there on profits and margins. So they can sometimes take short corners. So we have not allowed that to happen. Third is that we are a business which is also a service business, which we are giving to some of the best global companies. We are supplying our products, we are services. So they do as much of an audit as we do. So that is the other advantage for us. And fourth, we have plants, as I said, globally. So we can use best practices that we learn from across plants in these. So this is some of the reasons why. So we've never taken a short-term attitude. That's why many people had written us off in pharmaceuticals after the Abbott sale. But I think quietly we were doing it. And I think that's why you're seeing what we've done.
And do you think that the growth CAGR that we have seen in our pharma business is something that we should be aspiring to maintain over the next 5 years also? The 5,000 crore turnover, something that you would like to double over a 5-year period?
So I'm not going to give specific numbers now because I have not shared that with, but the idea is that we will continue to grow. As I said before, one is that there is many opportunities for organic growth. We are in three different areas. One is in manufacturing of products and services for global companies, which is increasing. The second is in complex products, complex generic products, which are like inhalation anesthesia, where these are not easy for people to replicate. Either it's difficult to manufacture, or there is some technology, chemistry involved in it, or the distribution is difficult. So these are complex products. And the third is in the OTC, which is an Indian, which is only in India. So all these areas, there are good opportunities to grow both organically, as well as I said, there's a lot of inorganic opportunities as well in this. And so we will do a combination of these three, and I feel confident that this will be a good growth engine for us.
Right. Mr. Piramal, we have quite a few questions from the investors also who are posting them. So we'll just keep taking some of the questions and
Sure.
we'll just post it to you. So
So
Yeah.
the first question that has come to us is related to your consumer financing business. While we
Yeah.
have shared a little bit of details related to that in our first quarter earnings, but if you can just throw the long-term vision related to this business, how we have, like for example, what we did in case of wholesale financing, almost $7 billion of loan book. So how do you see the growth trajectory? We are not looking at the specific numbers, but in terms of growth trajectory, what kind of opportunity do we have? If you can share your vision related to the consumer financing business.
So as I said, this is both, we are going to begin with secured lending in this space. It will start essentially what we are trying to do is not to compete in the larger cities. Today, if you look at it, most of the people, the real growth from, let's say, the housing finance companies has come from targeting the salaried class people in the larger cities. We realize that it is very difficult for a newcomer like us to start competing with that. So we would like to go into what we would call Bharat cities, the tier 3, 4 types of cities. They need not necessarily be people who are salaried, but they could be self-employed people. So the main thing is to do secured lending. And if you look at again in that space, look at housing finance companies. Amongst the top 5 housing finance companies pre-COVID and post-COVID, you will find that not all of them have survived. We've seen closures, and there is a space left in the market, which is where we want to be in. We want to do it with both digital, as I said, at the core. So use digital, but you still need physical also. So terminology used could be like phygital. So we are creating we have already recruited the team. We are creating the technology and the processes. And we will start with we are building that investment is happening in this year. We will start with a small presence this year and then continue to grow it. So that's as far as the housing finance is concerned. But in addition to that, we're also looking at MSME. How can you do secured lending to MSME, which is again an area which is the strength of NBFCs, but not many have done it. So that's the other area that we are looking at. And how can we, so those are some of the products that you will see that we will build. Obviously, if there are good opportunities for any inorganic thing, we would look at that as well.
That leads to the second question, and there are multiple questions related to this. So, are you looking at
Yeah.
any inorganic opportunity in the financial services business, either by a portfolio buyout or acquisition of
So
any
if we
company?
do an inorganic opportunity in financial services, it would be more in the retail space. I think wholesale, our understanding is good. We have a good sized book. So I'm not looking at acquisitions in the wholesale space, but again, in the retail space. But what is important is, one is there must be a strategic fit, which, as I said, retail has. But more importantly, we have to see the quality of the people and the quality of the book. I think that's so important, and we'll be very conservative in that because it's easy to grow a book, but it's more difficult to collect it. And therefore, we want to make sure that the quality of book and quality of people are there. And it should be strategically fitting in with what I said is our emphasis on the Bharat, whether it's on housing finance or on MSME. And it has to be secured lending.
So, way I take it, it could be a acquisition of the company or the portfolio, whatever is attractive.
So it depends. Again, one of the things that over the years we've learned is that in any acquisition, you have to be really conservative and we have to see where there's value. We will not do an acquisition for the sake of just doing an acquisition. And it doesn't mean when I'm saying that because you asked me the question, I'm saying that we are looking at it. It doesn't mean we will do it.
Sir, do you think for NBFCs over a long period of time, banking becomes a very obvious transition to at least fix one side of the balance sheet permanently? And in that context, how does Piramal thinks not over the next 2-3 years, but does the longer term aspiration remains to be a bank in financial services?
So you are very right that one has to set the liability side of the franchise, which is very important. Whether it is through a deposit-taking license, whether it's through a bank, yes, the ultimate intention must be that you can get into a bank. We have to see also how the regulations evolve. I think the RBI is looking at this at regular basis. The fact of the matter is that there are just not enough banks in the country. If you look at the private sector banks, there are not that many which are there. And for a large country like India, you need more banking. Also, from the statements which are being made by the finance ministry, I see that public sector banks also, they would like to privatize them more and more. So in some ways, the trend is towards getting more openness in banking. But again, there are many issues that will come up. So over time, we'll see. If there's an opportunity, we would like to do that for sure.
And do we look at the financial services and the pharma businesses being listed separately at some time in the near to medium term?
Yeah, so Rajat, as I have said, and I said that earlier in my talk, also in the medium term, we will look at these being two independent listed entities.
Sir, as a part of your retail expansion, would you also look at the non-lending businesses to get into something like asset management? We already have a asset management now, but this is more towards the wholesale side. But the retail asset management or an insurance business, something like that, would you like to diversify into some
So
of the places?
at the moment, we are not looking at insurance. But these things will again evolve. Let's see how the time goes and forward. But today we are not looking at any insurance business. As I said, we are looking at the fund business. We have now several relationships which have been developed over a period of time. We will continue to grow those.
So as the moratorium period gets over on 31st August, and we are hearing about this restructuring scheme granted by the RBI, how do you see the behavior from the borrowers or the customers, and what kind of stress you think the system would be looking?
I think this time it has been a calibrated scheme, whether it's the moratorium or even the restructuring. The details are yet to come out as much, but I think the restructuring is a good thing. It needed a one-time restructuring. It's given for, specified criteria they are putting up, and I think it's going to be good. And we have also learned from the mistakes. The system has learned from the mistakes that were done post the global financial crisis when a large wholesale restructuring was done and a lot of things which were not supposed to be restructured then were restructured. So I think this time it looks like a good scheme, the outlines that have been put out. More details we are waiting. And I think it's actually good. It was needed because there are many sectors which would otherwise have just gone into an NPA. So I think it was a good thing. I don't see stress increasing. The stress would have been there. This will help alleviate the stress because if the account is not NPA, then one can lend to it and one can really make a proper restructuring. What is it that they have the ability to pay back?
So one of the questions that we have received is your views related to the real estate space, because you being one of the largest financier related to this space. How do you see the consolidation theme going on into this? Because earlier the expectation was that the consolidation will accelerate, but at least we are not seeing that much progress on that front. So what's your view onto the consolidation as overall and as well as on the real estate side?
You're talking of consolidation in real estate or
Real
in
estate space,
funding?
real estate, real
In,
estate,
so
real
that
estate.
actually, frankly, the consolidation is taking place. It's actually taking place customer driven as well as lender driven. So it's only the stronger brands which are there, and people have the confidence that they will be able to supply, they will be able to complete it, are the ones which are selling. Even in this COVID time, you will find that sales have taken place. So that is one thing. Also, as far as lenders are concerned, they will only lend to those whom they have confidence they can complete projects and actually repay the loans. See, it's important in real estate to recognize that completion of the project means value gets created. And therefore, lenders will only lend to those people whom they think will complete, and they are the ones who are the stronger ones. So, therefore, consolidation, whether we like it or we call it, it doesn't mean that companies will merge, but you will find that only the stronger ones will actually do better. Talking about what is the environment of real estate, actually, as I say, if you ask me in April, it was a completely different picture than what I'm seeing today in August. Commercial real estate space, which everybody has said that from work from home and all that, therefore there is no future for that, is actually not true. If you look at whether it's Bangalore, Hyderabad, Pune, wherever there are large parks which are being made by good developers, there is a demand still for them. And actually, there is a move of a lot of people and the global companies actually asking for more space. I think the whole thing with China is only adding to this. As far as residential is concerned, depending on markets, by and large, as far as affordable housing is concerned, as far as depending on each market, what size of the ticket size is concerned, but the mid-tier housing is still actually picking up. I'm also finding a new trend in this work for home is that many people realize that this work for home will continue for a while and maybe a way of norm because you don't need to always go to work now. Even I mean, 6 months we've not gone to office, but yet work goes on and your conference is going on and probably a larger attendance here than if it was physical. So all that means that people are also looking to increase the size of their houses. So whereas the really luxury end is going slow, but the others are picking up. Also, one big factor affecting real estate positively is that the lower interest rates. We've seen in the past as well that real estate, residential sales is very sensitive to interest rates. So combination of all that is that I think I see the markets coming back and to pre-COVID levels. I believe that you will get them in the last quarter of this year or the first quarter. In some areas, actually, it's already there.
So Piramal, over the last 2 decades, IT has been one of the largest contributors to this country's growth rate and being the global capital of India. Do you think that the pharma sector in the coming years can be at least of not that same size, but can multiply many times given the changing events and the scale that our companies can make for the global companies, and yours is a prime example of that?
I think so that pharma has a good growth potential. As it is already, we are actually the largest manufacturer of formulations globally as a country. And I think we can do much more than that, whether it's in the APIs. And another area I think which is very important is in the healthcare spaces as far as the diagnostics is concerned and diagnostic equipment. You've seen that the prices of diagnostics which are being charged globally are just too high. And it doesn't make sense. And you've seen that when they have been manufactured in India, for instance, there was a big uproar on stents, if you remember. You could manufacture in India at a much lower price than what global were at the same quality. So I think this will only increase, and you will find that that's going on. Even in IT, I think we will go beyond this, whether it's in all the new technologies as far as IT is concerned. Can we deliver products which are for IT rather than just doing services? I think that this trend will go on because when this work for home is going to continue globally, you'll find that there will be many more engineers which will be working in India for global companies. After some time, they will spread out. So that's how the ecosystem will develop. And I think that you will see more.
So one of the questions that we received is, what is your view on the recent announcements by the government on PLI incentives in pharma or the API sector?
I think, frankly, what is really important in pharma and all is that you should get really quicker approvals to do that. The time that is taken as far as environment approvals, pollution approvals are concerned is taking too long. The government has to bring in focus on that to see how we can increase these approvals, and then it'll happen, I think.
The another question again related to pharma. In next 4 to 5 years, biosimilar are expected to create value in the pharma space. How is Piramal Enterprises positioned to capture that opportunity?
So biosimilars has been talked about for a long time, but the biosimilars we must recognize it is not like any other generic. It requires a long investment, and you need individual. Every biosimilar also needs to go through clinical trials, and that's why you see that there are not many biosimilars that have launched out of India. So our view is that we have not yet invested in biosimilars, but we may do that. We're still looking at that, and let's see. We have some plans, but it's still too early.
So Piramal, you rightly mentioned in your introductory speech that as a group, we are at an inflection point. So I would let you conclude this session with some remarks on, if you can just outline on what lies ahead for us in this wonderful journey ahead.
So as I said, we are at inflection point, and as we discussed earlier as well, in the midterm, you will find that financial services will be a independent company listed. So will the pharma be an independent listed entity. As far as financial services is concerned, we will diversify and we'll make our book granular. And I see that growth rates will continue both in the wholesale as well as the retail space. In pharma, as I said, we are in the three areas that we already are in. One is custom manufacturing of products and services for global pharma. The second is in complex hospital generic products for global markets. And the third is the OTC. All these areas are high growth areas. Today, we have an inflection point is that we have got now enough capital which will be there for these businesses to grow. As I said, on a consolidated level, by the end of this year, our debt equity ratio will be 1:1. As far as the as far as the debt equity ratio in the financial services is concerned, my objective is that by the end of March 21, I want to bring it down to below 1:1 as well. And similarly, so in pharma. So with consolidation taking place globally, with opportunities both for organic as well as inorganic growth, I think we are well positioned to take on the future. That's why we say it's an inflection point.
Mr. Piramal, I must compliment that we are always in the right businesses at the right time, and that has created tremendous value and wealth for our stakeholders. We have deleveraged the most at the right time to again participate in the growth journey ahead. Our best compliments, and thank you very much for sparing your time for this session with our investors. Thank you. Have a nice day.
Thank you,
Thank
Rajat.
you.
Thank you, Alpesh. And all the best for your conference, which is one of the most looked for conferences in the space. So once again, thank you and congratulations for all that you all are doing.